Welcome back to InvestorHubX.com. In today's lesson, we're going to talk about something very important: imperfect entry. Most beginners believe trading is about drawing a perfect line, one exact resistance, one exact support, one perfect entry. But the market doesn't move with mathematical precision. It reacts within zones, and that changes everything. In this lesson, you will understand why you should think in terms of zones, not lines. Why perfect entry is a myth. How to use multi-timeframe analysis to refine your entries within a zone, because sometimes you simply cannot draw a clean line. And once you master imperfect entry, your execution becomes more realistic, more structured, and more professional. Let's get started. Let's illustrate this using Hedera Hashgraph on the weekly time frame. Before we continue, do you remember how to draw key levels? Let's recap. This is one key level, this is another key level, and here is one more key level. Now look carefully. If I want to enter a trade here, when key resistance turns into support, which key level should I be looking at? Is it this one, or this one, or this one? Think about it, because this is where most traders get confused. On the weekly time frame, all three levels look important. But price does not react like a laser beam. It reacts within areas. Sometimes it wicks above. Sometimes it dips slightly below. Sometimes it retests imperfectly. So the real question is not, which exact line? The real question is, which zone is price respecting? So how do we solve the problem of imperfect entry? We solve it using multi-timeframe analysis. On the left, we have Hashgraph on the daily time frame. On the right, we have the 4-hour time frame. Now notice something important. The key level zone on the daily chart corresponds to the key level zone on the 4-hour chart. Same key level. Same overall downtrend structure. This is not random. The higher time frame gives you the location. The lower time frame gives you the execution. Now look at the 4-hour chart on the right. We draw a trend line following the lower highs. As long as price stays below this trend line, the market is still in a downtrend. But once price breaks above the trend line, that is your first confirmation that the trend is shifting from a downtrend to an uptrend. Now, you're not guessing. You're entering inside a higher time frame zone with lower time frame confirmation. That's how you turn an imperfect zone into a structured trade. To summarize, the market does not move with mathematical precision. Support and resistance are not exact lines, they are zones. If you chase perfect entries, you'll often get frustrated. Instead, identify the key zone on the higher time frame, then drop to a lower time frame for confirmation. The higher time frame gives you location, the lower time frame gives you timing. That's how you solve imperfect entry. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.